Labour market data released in Britain today has set the cat among the pigeons. As well as a big fall in the unemployment rate, the thing that's getting a lot of focus is what's happening to real wages. Britain has had a horrible period since 2008 of continually falling real wages, which have made people, the poorest they've been basically in a decade. And what we got today was data showing that that squeeze is finally coming to an end. There was some confusion about exactly what the data showed, but basically what you can see here is that CPI inflation is running at 1.7%, and now nominal weekly wage growth is running at exactly the same rate. So for the first time, wages aren't being outstripped by inflation, and that means people aren't getting progressively poorer anymore. It doesn't mean that people are getting richer yet, although most economists think that that's what's going to happen next. So this is a big deal, both politically and economically. Politically, George Osborne, the Chancellor, will be able to use this to say that finally, the fruits of the economic recovery are starting to be felt by ordinary people. It puts Labour, the opposition party, in a slightly difficult position. They have been running a cost of living crisis and stressing that how much poorer people have got. And so now that things are starting to improve, then they might have to slightly change the message a little bit. Economically, as you can see from this long-run historical chart, this data today shows that we've been through a very weird and very painful period for wages in the UK, and even though we're coming now from quite a sort of bad place, at least that fall has stopped. And what that means for the economic recovery is, whilst until now people have been spending more money by saving less money, if we do start to see wages start to increase again in real terms, then that ought to put consumption on a firmer footing and make people a little bit less worried about the stability of this UK economic recovery. So we're talking here about average weekly wages, and people often say, well, hang on, averages hide quite a lot of different trends underneath that between different groups of people. And that's true. People here wonder, well, are the rich actually doing a lot better than the poor? In that sense, there isn't really a story there to tell. The pain has been very evenly spread between different income groups, all the way from those top earners in the city behind me to people working on minimum wage. But the real difference has actually been between different age groups. So as you can see here, the young workers have really had a very, very painful squeeze on their wages, whereas older workers, the 60 plus, particularly have had a much better time of it. So that's where the distributional differences really lie. This is Sarah O'Connor for the Financial Times.